Hi, my name is Alex Ripko with Royal LePage Benchmark with the Ripko Real Estate team in Calgary, and I'm joined here today by Jim Chu.
Hi, Alex. This is Jim Chu from Royal LePage's Loretta Finney team. I'm here in Mississauga, Ontario.
So with what's going on here in Calgary, with the initial shock of the social distancing and COVID, things are starting to ease here in Calgary, which is bringing some buyers and sellers back into the market. However, the market still is remaining far from normal and prices are still trending down here in Calgary. So in May, the housing market remained slow, but the sales exceeded what the lows were in April. So they went up by 88.5% compared to last month, but we still saw a 44% decline from last year. So the activity has shifted toward more the affordable product, which is under 500,000. And that's causing different trends depending on the type, the price range, things like that. As well as sales are just all decreasing in all price ranges. And it's definitely seen in the higher price ranges where the drop of inventory is not enough compared to the drop in sales. So additionally, the months of supply is far higher than what's already elevated during the past 5 years. And the shifts in sales toward the lower price product is contributing to steep averaging price declines in the Calgary market. So we've seen a 32% decline in new listings, a 26% decline in inventory levels, as well as the months of supply are at 4.36 compared to 3.33 last year. We like to look at benchmark pricing rather than average pricing. So the benchmark pricing reflects a comparison of the same type of home rather than just the average of all. And the benchmark pricing has eased by 2% just compared to last year and 0.4% compared to last month, while the average price eased by 7%. And it's currently at 439,000. And so this doesn't come as a surprise right now because we have more supply than demand, as well as we're having a lot of unemployment and job losses due to the oil and as well as COVID right now. And so that's really weighing on the consumer confidence as well as the housing market. Some of that job loss is temporary. However, the energy sector is the largest concern there.
Yeah, our average price for the month of May was $863,599. Now, surprisingly, that's actually 3% better than it was May of 2019, which was 838,248, and about 5.1% better than last month of April, which was 821,392. Unit sales, obviously down from what it was last year. It's down 53.7% with 4,606 units sold. But that's actually a lot better than what we did in April of this year. April, we did 2,975. So that is a 54.8% increase in unit sales. So not bad. You were saying your economy is starting to open up. Our economy is opening up. We're at stage 1 right now. But I think for the real estate market, I think the increase really has to do more with the fact that people are getting used to this new normal. They're understanding that procedures and policies are in place to make showing, buying, and selling a lot safer. So they're getting used to it, okay? And, those that are buying were, for the most part, pre-qualified before COVID-19 started. So they had the pre-approvals and everything. So, they were just waiting for the right time or just waiting to get out there. And it's funny that you were talking about your affordable being under $500,000.
Yeah.
Well, in our market here in the GTA, Toronto area, affordable is I'd say about 8 to 900,000.
Wow.
Definitely under a million is the hot market.
Mm-hmm.
And yeah, and in terms of benchmark, detached homes in Toronto last month, the average price was 1,422,273. That's actually a 13.8% increase from April, which was 1,249,730. As a comparison, downtown Toronto condominiums, average price there last month was $774,069, which is a 12.1% increase at 690,225. So both both areas are month to month is increasing. So speaking of condos, that's a hot. I guess you could say it's a hot topic with investors. A lot of people like to invest in condos. How's your condo investment market in Calgary?
So our condo investment market, let's just firstly, if I just go through a little bit about the market, the overall Calgary market with condos, where the sales improved compared to last month, just like everything else.
Mm-hmm.
But we still have that 56% decline compared to 2019,
yeah.
Where the months of supply have jumped to 10 months from 5 months.
Oh, yeah.
So months of supply have just increased drastically, and benchmark prices declined more than 2% compared to last year. So I've done a little bit of a breakdown here with regards to a few properties that could be considered good investment properties where they're in good desirable areas. And going through here, so this one here is listed at $210,000 with an approximate down payment of 20%, which would be about $42,000. With an approximate rate of 2.79 over 25 years for your mortgage, would be about $777 per month. With your tax amount is $1,277 per year, breaking that down to $107 a month. Condo fees here are $356, and then approximate home insurance, $100 a month. And then your total monthly cost for this property would be about $1,340. And so looking into the rental statistics in this area, the approximate rent that you could get for this property is around $1,300 to $1,400. So really your monthly cost is right around that range of what you could get for rent. Going into a second one here, listed at $169,900. Again, with that 20% down payment, with your mortgage at 2.79 over 25 years, you could have your monthly mortgage would be $628. Tax amount would be $85 a month. Condo fees, $101 a month. And the total monthly cost there would be $994, right? So when you look at the approximate rent for this property, it would be around $1,000 to $1,200. So you'd be making a positive cash flow in this property. So that's something when you look at the positive cash flows, it's intriguing to see that your monthly cost of this property is under $1,000, and that's insane compared to what you see in Toronto and in Ontario.
Oh, wait until you hear my numbers.
And then this last one here is I wanted to go a little bit higher in price here. So this one is in a very desirable area in Mission, closer to downtown.
Yeah.
And so it's listed just under $300,000, so at $299,900. Again, with the same 20% down payment and 2.79% over 25-year mortgage. The mortgage payment would be about $1,110 a month. Tax amount would be $173 a month. Condo fees are just under $500. And then, so your total monthly cost there would be $1,881 per month. So just under $2,000. And so your approximate rent here would be $1,700 to $1,900 per month. So again, still within that range of what your monthly cost is. So
Yeah.
it could be slightly negative or it could be slightly positive.
Yeah.
And again, these are all based off of what is today's market value as well as today's rents.
Sure.
So, I mean, it can shift month to month, as we all know.
Yeah. Yeah. Okay. So I didn't do as many examples as you. I just have the one example. Uh, it's downtown Toronto. It's right near the Rogers Centre. The address is actually 5 Mariner Terrace. It's it's a 1-bedroom plus den, approximately 700 square feet. There's actually 2 identical units in that building. There's one that's unit 1006, and one at one is number 3006. 1006 is asking 679,900. 3006 is asking 729,000. So let's just say $700,000 average price. Okay. In that building, the average rent for 1-bedroom plus den is $2,450. Not bad. Okay. So maintenance for that unit is about $520 a month, which includes your water and hydro. You just have to pay your cable. Taxes is almost $2,400 a year, or about $200 a month. I unfortunately forgot about insurance, so that didn't factor into my calculations. So with 20% down, that's $140,000. You'll need to mortgage $560,000. I used a mortgage rate of 2.34%. The reason why I use that is because that's actually a rate that my bank's offering me. So might as well use something that I'm getting. So your mortgage would be about $2,464 a month. Okay, so adding your maintenance and your taxes would be, your expenses would be $3,184, or you would be at a negative $734 a month. It's quite steep. You know, maybe not everybody can afford that. Now, for you to get a cash positive or cash even investment, you would need to put about 56% down. That would be about $393,000 down payment. Okay, and so that would get you the approximately $2,450. That would get you that. But I guess really for a Toronto investor, it's not necessarily making money on the rental income. Sure, it's great if the rental income covers your expenses, but the way Toronto housing price has been increasing over the years, that's where your investment is. So as long as you can afford the difference, you're better off. You know, you're okay with taking a negative loss using unit 3006 as an example. Like I said, they're asking $729. That's the thing with Toronto condos, you might not be able to cover your expenses, but it's the fact that housing prices are increasing at such a rate that if you can invest in it, your return is actually the increase in value.
It's very interesting, because seeing that, especially compared to Calgary, where our market fluctuates quite frequently, especially because of oil and gas, and even more so now because of COVID-19, how it's affected our market, but not just on Calgary, but globally.
Yeah.
It's interesting just to know that you guys are just keep going up, while it's a little bit different here in Alberta.
Yeah. Well, I can't say everything's going up, but there are more desirable areas than others. But yeah, generally in the Toronto area, real estate's a good investment. know, it's not, you know, it's not for those that want a quick return. It's not, but it's a good steady investment here.
Mhm. Absolutely.
So
Well, thanks for joining me, Jim. My name is Alex with Roy LePage Benchmark in Calgary, and I'm here with.
this is, once again, my name is Jim Chu. I'm an agent with Roy LePage's Loretta Finney team. And like I always say, if you're looking to buy or sell, just hop on the choo-choo train. Take care.
Love it.